think of how long my cord will go. Celsius. I think I need to go out a little more. Yeah. Nice. I think it should be good.
This space is really neat.
I feel free to gather around here.
Mental notes. Lots of them.
As we gather, feel free. There's couches over here. Just kind of hang out, make yourself at kind of home. We'll just have a kind of a casual conversation here with Nate Reagan with RTO and Company of the CBA. Yeah. Maybe. Before we get started, though, I've talked to a few of you about this space, and I wanted to introduce you to Logan Merriam. Am I saying that right?
Yes.
Yes. Come tell us about yourself. You can tell us a little bit more about the OutPost, this space, and the other co-working space they have over above Ferment. But this is Logan.
Yeah, hey guys, thanks for coming. So I run OutPost. We're just a couple of little local co-working spaces. You guys are all entrepreneurs and business people, so I figure some of you might want to check us out sometime. We're kind of in like a little offshoot new space. So our other spot is fully equipped with kitchen, conference rooms, a bunch of privacy booths like this. We've got co-working, so you can kind of work in an open area, benches like that. But we also have private offices and conference rooms if you need to host a meeting. So that's always available. And just a special little thing for you guys, if you want a free day pass, go search us up, find our website, and get an account. And then just email me or message me in the app once you have one, and I will give you a day pass so you can come and check it out. Cool. I think that's it, Russell.
Awesome. Nice. Thank you so much, Logan. Thanks for hosting the space for us.
How much does it cost for like a meeting for if you needed a meeting for 3 hours or something?
So we have our meeting rooms over there for 10 people, so they're pretty large.
Yeah.
And they are $65 an hour. Or if you have a membership, any of our memberships, they are half off. So $32 an hour. Yeah. Oh, yeah. Any other questions?
Great question. I'm sorry. Give me the name of your company.
Oh, OutPost office. Yeah. Cool. All right. Thanks, guys.
Thanks, Logan.
Sweet.
Well, thanks you guys for coming. I know most of you. If you don't, my name's Jacob. I'm the Venture Catalyst Project Manager working on the Mid-Columbia Regional Innovation Hub, Project of Business Oregon, developing regional innovation hubs throughout the state. The goal of the Regional Innovation Hub, I'll just keep saying that over and over again, is to cultivate and develop startups, entrepreneurs, and founders throughout our region. There are 9 regions in the state. We want to make sure that we're connecting anyone who has a good idea to the resources they need to be as successful as possible. So that's mentoring relationships, financing options, investment options, as well as just business training, business development, how to make a business plan, things like that. We try to connect you. My biggest fear is that someone with a really good idea for a business falls through the cracks just because they don't know how to navigate that system. So that's our goal here. Part of the strategy of that is hosting these lovely events that we're calling HubTalks. Trying to keep it as informative and valuable as possible so we can talk about things like accounting strategies. I can't tell you how many people I've talked to that are like, yeah, accounting isn't something I want to think about, but I know I have to, so I should probably like pay attention to that. And that's why we have lovely people like Nate to talk to us a little bit. We'll have a brief, just kind of like sit down, interview. There's a small group, so it's going to be pretty casual. And we'll just open up if you have some questions that are unique to yourself. You're like, you know, I'll speak for you. He's not going to come up with like your tax plan tonight in front of everybody, but if it's like a general question, we'll just kind of open up and have a conversation and talk about it. Joe's gone. Sorry, guys. So, yeah, everyone, welcome Nate, please.
Thanks. Yeah, thanks. My wife says not to start with a joke, but do you guys know why accountants make such great lovers? Because we're good with figures.
Hey-o!
Anyhow, yeah, my name's Nate Reagan. I'm a CPA, graduated from Boise State in May of '96, moved to White Salmon in November of '96, and started with a practice in the Dalles at that time, actually November 16th, '96, so 28 years ago this weekend. We're now a RTO-owned company. We do lots of tax, municipal auditing, some bookkeeping, some payroll, the whole gamut. It's the gorge. I work with an orthopedic surgeon one day, a restaurant over the next, a painting contractor. I deal with rental sale, business sale, entity selection. Accounting covers kind of the whole gamut it's the backbone of every single business. So worldwide. So anything you can do to improve your accounting skills obviously is helpful. Our practice isn't like all about just cranking out tax return. It's more like holistic, looking down the road with your family. Are you maximizing your retirement contributions? How about your kids? Can we get them on payroll? Can we get them a Roth IRA? Can we start a legacy there for your family? What about next year's tax burden? And that's what small businesses I see to work with is they get too caught up in like the weeds and not like the bird's eye view. And so as a CPA, we try and kind of give the longer range kind of view from get the best outcome for everybody. So I'm not really sure. I kind of thought that this might be for a brand new business owner, like simple best strategies, best basic accounting principles, things to think about. I'm not sure what the temperature of the room is. Business owners. I hear some have just sold a business, retirement planning, those kinds of things. Do we want to talk about who's in the room?
Yeah, there's few enough people here, like, really quickly, like, maybe we just go down, like, 15 seconds, where you're at in business, new, old, what you own, things like that, so we can kind of get a quick feel. I'll just start over here. No, not Noda. Okay, great.
I'm McCad staff, everyone. So if you have any McCad development questions, any ideas for future events, happy to chat with you.
This is Andrew.
Yeah, sorry, Andrew Andrews.
Hi, Andrew. I'm Rachel, not a business owner, not starting a business, but love to learn.
Hi, I'm Russ Wolsey. I'm the founder and owner of Daylodge Gear, based in White Salmon. Inflatable awnings, bags, flex mounts. You can find us at daylodge.com. I'm year 3. And my Kickstarter ends on Sunday for a product that was interesting.
I'm Steve Olson. I'm the ex-owner of Sightline Applications. Just sold that 2 years ago. It's a software company that does video processing. And I'm probably going to start up another company that does video games.
Jason Hartman, staff for McGinn and Portage Tech Alliance. Stoked y'all here. Thanks for coming.
Logan, obviously run OutPost offices, and also work with tech startups. I have a mental
swing back over here and then we'll come back.
Hi, Ellen Wild, and this is my husband, McCray, and our daughter Fiona Wild is a professional water sports athlete that created a nonprofit called Wild Wind and Water, and we just finished our third season, so we are just starting to really take off.
Cool.
Where's she?
She just got back from Singapore, so she's a little tired.
Christy Christopher, a really early stage business, so just developing a product right now. I did a business previously, a small business, so I had to do bookkeeping with that.
Cool.
Dan Fuller, started my consulting company 2 and a bit years ago. Live here in the Orange and kind of just one-man show consulting.
Cool.
Jesse Lardick. I have primarily a video production company called Lardick Media. Do photography and all things sort of, what is your digital first impression? That's how I think of it sometimes.
Yes. Dan.
Yeah, hi, I'm Dan Shaw. I own Delta Sierra Aviation. We're based in Dallas Airport. We've been in business for about 4 years, and we primarily work with companies that need to put payloads in the air to test them. And yeah, accounting and bookkeeping in general is one of the things that's, in my opinion, is the hardest part about running this business, so that's why I'm here.
I'm Susanna. I don't own a business, but I work with businesses, and I share these type of resources.
Cool.
Hi, I'm Joe Griffith. This is my wife, Lori. We own Magnet Custom Works. January will be 3 years in business. Yesterday was actually our first year where that's primarily all I'm doing. We work with a product called Cerakote, and I actually work with GAN as well as a contractor who flight test support. Cerakote does ceramic polymer, a lot of aerospace and automotive and gun companies use it as a coating.
So he does the work in the business, and I do the run the business.
Nice.
I'm Matt with Direct Line IT. We provide IT services to businesses throughout the board and beyond. We focus on cybersecurity and compliance, primarily HIPAA, FTC safeguards, and everything in DoD land, aka CMMC, ICAR, doors.
Daniel with Liz Woodworking. I do custom kits, whether it's for your kids, yourselves, or for businesses. We can laser engrave, CNC, or hand make just about whatever we come up with, or you come up with.
Ryan Ernst, I work at Zipflight Labs, I'm a mechanical engineer, not a business owner, but like to drink.
Yeah.
I'm Carrie Perkins, not a business owner, but here because I love learning and just meeting people.
Emily.
Oh, hi, I'm Emily, business owner, Manuel Home Bar, from the Columbia Gorge area, and
Available for mobile bar services, just in case you everyone needs it. It's a miracle. So we can have beer and wine in a lovely place like this, so. Yeah, cool lay of the land. It's like a little bit of kind of everything, so. Keep the conversation, hopefully as helpful as possible, so. To tell you guys a little bit about the kind of guy Nate is, I just sent him some like, hey, here's some like conversation about this thing we'll talk about. And he came and he's like, hey, great, I like filled out the answers with bullet points, they're bolded, and there's even like some spreadsheets back here. These will be available. There are some copies that he made enough for everybody. So he's very thorough. I would say that. Would you describe yourself that way?
Sure.
Yeah.
Yes. Definitely a bean counter. Yeah, no, I think for basics on accounting, I'll just kind of like go into like what I would think about as a new business owner, and then from there we could kind of go to more like talking about people who sold a business or strategy stuff. Those that are getting used to accounting, if you're not good at it, there's such great resources to hire out, especially payroll. There's outsourced bookkeepers. That's like a plus. That's where I see the biggest struggle when new clients come with a new business is they don't know how to make sense of their books. Look at it as, you know, keeping business and personal separate, obviously, because business you don't want to commingle. Then you can easily see how your business is doing, obviously. But we always kind of try and take the approach that tax filing is a year-round process versus just at tax time. And if you can get in that mindset and then get, you know, out of the weeds and like bird's eye view, look at your financial statements, you can see how it's going on a monthly basis, quarterly basis, and so on, so that you're not caught off guard at year end. If you have employees, you're doing payroll. The Gorge has Northwest Payroll Service in the Dalles, Paychecks, ADP. Outsourcing that is a huge headache that's out of your hair. I know Dan, you and I spoke about bringing kids on, budgeting. If you don't budget, look down the line a little bit. You know, it's helpful to kind of get an idea where your practices are going and control your spending, depending on your business and when your cash flows are coming. For debt, you know, we always try and say avoid debt, only borrow on appreciating assets. Start with a business debit card to get going versus lining up a bunch of credit that you may not be able to afford. You know, so it depends on what you're buying, how things are. You know, if you're buying an airplane, that might require some debt.
Actually.
I want to jump in with a question. I honestly can't remember if I listed it here, but I think this might be vague enough, like all-encompassing enough that it could apply to some people here. Whether they're like day one or like year 5, when people come to you and you're like, hey, I need to get my accounting, my finance stuff in order. I need your help in doing this. Like, what's a common mistake that you see? Hey, you messed up here, and I always use this image of like everyone's built like an IKEA piece of furniture, and you do something wrong in like step 2 or 3, and you don't realize it until it's like step 14, and you're like, I have to take this whole thing apart and redo it again, and it's the most frustrating thing. And I'm like trying to think, can I just live with it? Facing the wrong way? Will that drive me crazy? And I'm like, no, and then I take it all apart. With that metaphor, what's something that like you did it wrong in step 2 and now you have to go back and redo it? Is there a commonality you see that happens often?
You know, it's usually just not understanding, you know, and then commingling of too much, you know, or losing track, not forcing everything through one bank account and losing deductions because they use their personal credit card, or you know, their wife bought something and there's no way to know about it because they didn't tell you about it, and so you've lost deductions of overpaying your tax. So that's where we try and mold everybody into like one system to force, you know, everything through a bank account. Because when you get audited, and I've been through many audits with clients, you know, the IRS is going to look at everything that ran through your bank and compare it to your deductions and your receipts, so income and expense. So that's probably the biggie, is just not keeping track.
So just writ large, not keeping track is like you just
losing opportunities, and then bringing in things that you may not know could be deductible, like startup costs before your business started, that typically you can bring in and capitalize in the first year of business, you know, for getting your business set up to start, that some folks just totally ignore. Not necessarily attaining your education to do your business, but you know, the legal fees and things that are pre-opening your business account that would be deductible after. I mean, you could plan this business for 2 years and still bring all those costs into the first year of your new business. So those are things that are overlooked. But if it comes in as a mess, I generally see if we're able to help clean it up, but we usually recommend a bookkeeper to clean it up and get it in the right place.
I want to ask you about timing a little bit, because it's hard to really know when you want to kind of make that formal step of like, hey, I'm starting to kind of work on this business on the side. Maybe I'm just like, you know, I opened up, a Square account and I'm doing this. At what point should people start considering, you know, hey, I either need to register a business or start having a separate bank account? Like, what's the timing of that?
I guess it depends on a few things. Liability would be the first. your type of business.
Talk more about liability. What do you mean when you say liability?
Well, if you have a product that could hurt somebody, if you could have libel from something you say or you print, or, you know, that's where I have, like, you know, a bunch of relationships with local attorneys to form an LLC, even a basic one, and or maybe you don't need a limited liability company. You could just get an umbrella policy to safeguard your family assets from your business activities. It just all needs to kind of go together as you grow and move through the ladder from, you know, just a basic Schedule C, sole proprietor, self-employed. And, you know, like Fiona, she probably started out very, you know, early in her racing career and then took it from there to build this nonprofit and use attorneys and that to form these legal entities to protect her and family assets. So, and it's all about liability.
Can you get like just like
Or
quick-
tax.
Or tax. No, that's good.
Yeah.
Let's say I'm new, I'm starting a company. Is there like an easy way to like, is there like a flow chart you can talk us through of what type of business should I register as, either an S corp, sole proprietor, or LLC? Like, is there an easy way to navigate that?
Yeah, so your mom and pop, quick, simple business, you could stick to a Schedule C, self-employed, which eventually you have enough net profit that the self-employment tax is kind of hurting. You might have some liability, form a single member LLC. I would usually use an attorney to properly document it, get an employer ID number so you're not using your social security number, and then you open a business bank account and that kind of stuff. And what we recommend is in the 50, 60,000 net profit, that's kind of where the self-employment tax, you have some opportunities to maybe switch and elect to be taxed like an S corporation. You're still an LLC, but you would start, it's simpler to form an LLC than it is to form a corporation. So sticking with that and raise your hand to the IRS with tax like an S corp, then you have an S corp that the profits then flow back to your 1040. The S corp doesn't pay tax, it all flows to the 1040, but you could pay yourself a reasonable salary up here and get a little squeeze on the self-employment tax that's can be prohibitive as you make more and more self-employment income. So I usually kind of run the scenario in the 50 to 60,000 net profit zone to see if that's a good time, and then is the bookkeeping in check? Because then you're a corporation, so you need a fully balanced set of books. That's where I would enlist a great bookkeeper, payroll, and those kinds of things. But the S corp is a great option. I'm seeing it both ways now. If you're a professional corporation like an accountant or an attorney, we get limitations on the qualified. There's the QBID, qualified business income deductions, and things that make self-employed folks kind of like a corporation. And you get a 20% haircut on your tax return. It depends on what you're making. If you're making a lot of money, may be better to stay self-employed and not go to the S corp, so you can still benefit from some of those deductions. But then if you're making over 150, the self-employment, the FICA threshold is basically Social Security is in the 150 to 160 zone. So if your net profit's above that, you may just stay where you are. But an S corp is a great route. It's easy if you have a good, clean, balanced set of books. Versus a corporation, a C corporation would be the other corporation. You have a corporate tax, and then to get money out of your corporation, it's a dividend, and you pay tax on dividend, so that's the double tax. Whereas an S corp, it flows your personal, and the net profit left in the business is free to the owner to take as a distribution, tax-free, because they've already paid taxes on it at the individual level. So there's some great opportunities for each of those entity types. It just kind of depends on your level of income as your business grows. And you would definitely want to work with, or as long as you have good bookkeeping.
Yeah.
Yeah.
When you say net, do you mean
After all expenses, depreciation,
employees and everything?
bottom line, yeah, what would be taxable?
So what, the 150 that you mentioned, like 50 to 150?
Yeah, the FICA threshold, which is Social Security, Medicare. Once you go over that, you don't contribute more to Social Security, and so you're kind of in the sweet spot. If your net profit's over 150, to where going on S, it may not make sense. Just kind of depends. I usually
May not make sense versus an LLC.
Just staying as a single member LLC. And then like pitfalls, like what I see is people jumping into LLCs and my sister and we just formed a new LLC, and I'm like, oh great, do you realize that's a partnership? So now you got a partnership tax return, and did you file, formal articles of organization with the state of Oregon or Washington? And it's no different than a marriage. Then they get in a fight, and so they got a divorce, and it's the same as a family marital divorce. It's it's a business entity. They got to separate the assets and split up. So if you have more than one in your LLC, you're a partnership, so multiple tax returns. So it can be kind of a challenge. It could be costly, depending.
I want to talk a little bit about cash flow. I feel like, in my experience, it's one of those like little things that sinks businesses very easily because there's not good reins on that. And I think we have a question. I see some good notes here, but how can small businesses or entrepreneurs or founders manage cash flow effectively to avoid financial trouble?
The biggie is just predicting your cash flow, getting like QuickBooks automated in a way that you can get your invoicing routine and out the door so your customers are paying, and then predict your expenses. You know what's coming for your business, your rents, your cost of goods sold, payroll, those kinds of things, and looking it out in a 12-month period and matching your revenue. That's a biggie. And I was hoping Tracy would be here, because she has written, Tracy from Hood River, back 60 Minutes CFO. I know Russ has seen the spreadsheet. She's got a great spreadsheet that helps predict and work with your cash flow, assuming you have the right inputs into the system. But for myself in my business, that's what it's all about, is knowing what your revenue and things are and getting it. Helps cash flow, but you have to look at it and be a part of it, and you have to have timely bookkeeping. So if you don't have timely bookkeeping, there's no way to know your cash flow other than what's in the bank. And then controlling your costs. What can you curb if you need to curb to save money. So
I want to talk a little bit about timely bookkeeping as well. A lot of startups, I hear the phrase all the time, like, I spend so much time working in my business, not working on my business. The people who have the good ideas aren't necessarily like the most like financially savvy people. They're just like, I want to go make this thing and it's going to be cool and I'm going to change the world. And oh yeah, here's a book of receipts that I need to figure out. What are some signs that someone should start hiring a professional? Maybe they're past just like data entry into QuickBooks. What are some signs where a person or business should hire a CPA, accounting, or bookkeeper?
I would, right there, if you have a book of receipts that you need to enter, you should hire somebody right off the bat.
I highly recommend marrying a bookkeeper.
Pretty much.
Yeah. Great advice.
That's but you also want a competent bookkeeper as well.
Make sure, That's the first question. It goes without saying. How good of a bookkeeper are you?
First date.
So, and it's tough because I work with some great people. I've had some people apply at our office to do bookkeeping, and I give them the basic balance sheet test. Let me know what's wrong on this balance sheet, and it's a perfect balance sheet. And they'll look at the negative, the depreciation, accumulated depreciation, which is negative, which is correct, and they'll say that's wrong. And so you gotta work with somebody that knows what they're doing. Otherwise, it's garbage in, garbage out. But I think if you want to focus on your business, get a bookkeeper ASAP. And there's, with NumberWorks, I use Strategic Bookkeeping in Portland. There's a few that I'm actually just starting to work with in White Salmon. There's plenty of great resources in the Gorge. And they can get it like 90% there. And then at tax time, we can look at it, or even in a fall review, this is when we're doing lots of tax planning to see how the year is going to wind up, make sure you've got your estimates covered and those kinds of things. And say, well, wow, that's actually written in the wrong spot. Get it kind of on track and changes the whole picture. So, but yeah, there's some great resources for bookkeeping, and if you need help, I definitely can reach out to me and I'll guide you.
One more question I have, and then I want to open up to a little bit of Q&A as well. And this is kind of a big one, but what are some common tax deductions or like areas of tax deductions that small business can overlook, and how can you make sure that they're taking advantage of everything that is open to them?
The only way you overlook it if it didn't go through the bank, maybe. So things that are ancillary to your business that you pay for personally. Maybe you're paying for your cell phone. Your wife pays for it out of her account. Obviously mileage, home office things, utilities. We pull in. Our firm's an S corp, so we annually pull in home use of internet, cell phone, utilities. A reasonable amount. Health insurance premiums, if they're not run through the business, it depends on the type of entity, but those are a big one that some people don't take properly. They'll take it as a medical deduction when it should go to self-employed health insurance possibly, and that's a bigger benefit to the tax return. Retirement planning contributions are always an easy giveaway if you have extra money to like pound some money into savings for your future. And but it depends. You have to be careful. If you have employees, you may have to match them, which is also an expense to your business, but you may not want to do that depending on the employee if they're not going to be there in the future. Home office use, there's some new rules there. The things that don't run through the business books like that is kind of where we try and get those pulled in as like an owner contribution to get those expenses to reduce profit. Yeah.
So do you have any recommendations for, besides your accountant, to go to kind of determine what is a business expense versus what is not?
Well, you can look at are you a self-employed or Schedule C?
Yeah.
So you could look at the Schedule C itself for the different categories, but I mean, where you're spending your money is kind of where there's your deduction. If it's not in the business, that's what you want to look at.
So the areas that I often find, like if you are going to have a meeting with a customer and go out for dinner and stuff.
That'd be another one, meals.
Right.
And to use your business debit card to get it into the business books. And if you don't, then you need to figure out a system to keep track of those.
But then, how do you know that that's a legitimate business expense?
I think, the contemporaneous record rule is kind of the way I've always looked at it. Date, time, place, business purpose. If you can document that, how can you not substantiate that? When the IRS says, prove it. Well, I've documented it on this date, time, place. We talked about this at the meeting. You could be as accounting nerd as you want and really get detailed on those. There's some new rules on meals with clients versus entertainment. Golf is kind of like unacceptable depending on whose view it is. But for entertaining a client, but meals, like if this one right here, if it was all my staff, it'd be 100% deductible versus 50% deductible, even with their spouses. So, yeah, it's just a matter of keeping track.
I want to tag onto that a little bit. Based on audits that you have encountered, how serious do auditors go into? Hey, you wrote off this dinner. Tell me what happened there. Do they go that deep?
I've been through quite a few just randomly chosen audits, and it's really interesting to see. It's actually kind of sad to see our government show up and see what level of government technology is there. The last one, I had an IRS agent. She had like 7 cards that she had to scan to open her computer to actually get into it. The technology, I was just like, this is the U.S. government. But she basically, they take all your bank statements for every bank statement for 3 years, and they match your deposits versus income expense and what you're getting paid, and they go through it, and you need to be prepared for sure. So, and I had a few where all of a sudden I'm like, that's rent. We didn't know about this, and my client didn't tell us about it. So now it's a red flag for them, but we just have to work through it. But yeah, they go through everything.
So, here's an example. If you're renovating a hangar, for example, and building an office space in it, and you have receipts from Home Depot, are they going to say, okay, well, let's go see all these things that you built in your hangar?
They probably would, maybe, yes. And especially the airplane deduction. I've had a client get audited on his airplane, and he's from Dallasport, and so it's yeah, there's always bending the rules with the airplanes, but yeah, no, the visual, you know, vouching that it exists, it's called the existence test from an audit standpoint. And so, yeah, they vouch that it's actually there and exists. And, yeah, touch and feel. If it's not there, then, okay, where is this asset? I had a farmer who, his audit was cattle. And it was hard to substantiate the cattle because half of them are already slaughtered. Or they, you know, they've turned, you know, went from being in breeding stock, now they were, that was the hardest thing. I mean, I grew up in Idaho, and understanding cattle from the, whether they're raised or bought, they have different rules from a depreciation standpoint. And then when they can breed, they're a different type of asset. When they're done breeding, they're a steer. And so then they're just walking around until they turn into hamburger. And then the heifers, you know, they're breeders, so they're a different type of asset. And whether they're open or closed, meaning they have 1 or 2 cows, calves, and then, I mean, so this farmer was pretty interesting because, you know, trying to compare to substantiate
Living
Right.
assets.
So what if, like, for example, you spend $1,000 on R&D, like a project that you're trying to put together some hardware that would eventually be used for the business, and it doesn't work out, so that it's just all trash.
I mean, it's got a business purpose, you know.
But that physical equipment now is thrown away.
Yeah, I mean, think of restaurants, food. I mean, it's all cost of goods. I mean, yeah, it's not there. And you had receipts, you bought it through your business account.
You don't have to actually come up with.
No, I mean, you can't hold on to that stuff in the event, just preparing for an audit. Yeah, no.
Okay.
And a lot of that's de minimis now. 2,500 and under for computers and those kinds of things you can pretty much just write off versus maintain a physical listing and your depreciation schedule. Although, like your county business, personal property tax, they might want to see that detail of every lamp and desk and 10 key and chair, but you can just deduct it now as de minimis. Yeah.
Open it up. Anyone have questions about maybe your business, maybe a story? Yeah, open it up for you guys.
I don't know if this is too much of a tangent, but
Figure it out.
What can you tell us about this new like beneficial ownership?
Yeah, actually I brought 20 of these for everybody, one for everybody. Or if you haven't already finished the Corporate Transparency Act for our new financial, FinCEN. Basically everybody needs to, if you have an LLC or a corporation, you need to go to the FinCEN website, and it's a beneficial ownership information acknowledgement to the government. Basically put in your business name, EIN, fill out who's the beneficial owners, and then you don't have to do it again until there's a change in ownership. And there's some businesses, I don't know if it applies to anybody in here, but you can check the checklist. Accountants for some reason are excluded from having to do this. I guess they're so honest.
They're not
They don't even talk to us. But so I have these forms, and you definitely want to do this before December 31 because the penalties are huge. I imagine they're not going to penalize, but they're threatening that they will.
Is this new? $500 a day.
Yeah, it's like $500 a day. So it's to prevent
As well?
LLC.
So, right.
If you formed an LLC single member, then you need to go on, and corporation. But it's a very simple checklist, and it says who has to report, who doesn't have to report. And then if you, down the road, if you have a change in, like, if one of my partners leaves the practice, I need to go on and change the ownership, saying who's a new partner or whatever they left. And it's through the crimes network. They're trying to understand how many businesses are there worldwide that are operating in America, who the owners are, so they can kind of, I don't know if this, how they're going to use this to their benefit. Tax dollars at work. And our firm has taken the path to not provide that as a service because there's too much responsibility, and if something's changed, you know about it. And there are a lot of people who are going to drop the ball. But everybody that has an LLC or a corporation, S Corp or C Corp, should have received something from Oregon Secretary of State at some point this year.
So
And Washington
is that just implemented this year?
this year.
First time.
It's brand new.
Okay.
And when I filled it out, you have to put in like some form of ID.
Yes.
Or your driver's license or whatever.
Yeah.
I was advised that when the driver's license, you get a new one, like a renewal, you have to resubmit the BOI.
I haven't on my LLC. I didn't. But it's you could. Because I switched to the real ID and I didn't update a new one. It's my same picture and same address.
You're not in jail yet.
I figure it's okay.
Wait till Jan 1.
But if anybody wants the information, I have it right here. If you aren't aware, it's important to make sure you do it.
Does it apply to the nonprofits?
Nonprofits, don't know. I don't think so. But it'd be worth taking a look. I don't think it only is corporation limited liability companies created in the United States through Secretary of State is what it applies to. So it'd be if you file a single member LLC organizational doc with Secretary of State, then you need to do that.
Thank you.
Yeah.
Anyone else?
You talked about local accountants briefly. I was wondering is there are there big reasons to want to maybe spend a little more to get somebody in your area versus going to outsource bookkeepers? Is there much of a difference?
For like the actual tax return or for bookkeeping? For bookkeeping, here in the Gorge or elsewhere?
Here in the Gorge.
Yeah, I mean, I work with a bunch of bookkeepers here locally, and there's a lot of great bookkeepers. You can go online too for Portland. I have some that are 100% remote and fantastic, and it's worth every penny. They usually comes to us at tax time. I use them a lot for LLCs that own real estate and collect rents, and they just handle it all. And it comes, we just update depreciation, improvements to the asset, those kinds of things. Slam dunk in tax return. You save your money there. Because, I don't know, the Gorge for us as CPAs is kind of a dying breed. There's been a lot of retirements. From when I started right out of college, I remember all the local CPAs, and 2/3 of them have retired. And so, we can't get anybody to come up the Gorge and work in the Gorge. It's from Portland. Even being 100% virtual office, the software's in the cloud. I'm competing with CPAs in San Fran, Seattle to get a local CPA. And the lifestyle in the Gorge is, you can have an amazing life here like we all do, work-life balance, but you get a kid out of college, you pay him $100,000 a year, but the rent is a lot cheaper in Portland. Sometimes down here in the Gorge, they can't afford a house, so it's tough because there's less help. So we're looking out inside the area, just trying to find more CPAs to enhance our practice because we're saying no to too many people that we really want to work with. So, but
Actually, a related question, because you mentioned earlier, evaluating accountants and on how accurate they are with their accounting. But I was wondering if there's a good way to find somebody who does a little bit more of figuring out what what are you maybe leaving on the table, going outside of just crunching the numbers accurately.
Yeah.
Strategic stuff.
There's fractional CFOs. There's a few here in the Gorge that I've worked with that have ran some of these restaurants on this port in the Dalles, and they are incredible, and they make a difference. They're basically, I do it a lot. I'm a fractional CFO for some of my clients, and basically these guys and gals are great at their 3rd generation business, but I run and see ahead of them. They just run the business. They just keep the books tight and the financial planning. And some of the fractional CFOs I've worked with come to me with like the credits that are available, R&D credits, health insurance credits, getting a 401k plan in place. There's all these different things, and they already had it ticked and tied and ready and benefiting their client. Depreciation schedules, new additions. Somebody like you that owns or has the space, they could be probably a great asset for you. It depends on your CPA if they have enough time and or if you want to pay. That's the next thing is like that level of service, what some people really want to pay for. That's where I was trying to say, like, as our practice, some like H&R Block, they crank it through. We're kind of trying to look down the path, look at the whole family, trying to add some value, you know, to just other than just a tax return.
Nick, could you briefly give context to the phrase, if maybe you don't know, maybe you don't, what a fractional CFO is?
They basically, yeah, they come in and they are your eyes and your books and look for just the best habits, best accounting practices. They do the budgeting, cash flow forecasting. Yeah, they help you with labor costs. They help you just, food costs, depending on what industry you're in.
So
It could be daily, monthly, weekly. I've seen it always quarterly. And there's 3 or 4, and they're really good.
So it's like having like a corporate chief financial
It's like,
officer,
yeah, I
but
mean-
they're not fully employed just for you. They can do that for
Usually independent contractor, or some of them will get some equity in your company and then be a part of your team, like a small ownership. And then they have some skin in the game to really help you make sure you go forward. I've seen that in a couple businesses and it's worked out really well.
Do you have contacts?
Yeah, I do. I have 2 or 3 I could recommend. Yeah.
Are they usually like hourly? Is that how?
Some are hourly. They all have different structures. Yeah. But yeah, hourly usually. Yeah.
Andrew has a question?
Yeah, obviously we live in kind of a 2-state region. So
Yeah.
are there any considerations when it comes to citing your business on this side of the river versus that one, incorporating in the 2 different states when you talk about that?
Yeah, that's a tough one. My practice is in the Dalles. I have some real estate in the Dalles. I live in White Salmon. It's definitely no tax haven, especially with the state and local tax cap. That your personal itemized deductions were limited to 10 grand. Back in the day, that's one thing I'm hoping will change. But back in the day, you could deduct all your tax, so it's kind of nice. You could deduct all your Oregon income tax on your itemized deductions, and with your property tax. Now you're limited to a max of 10. But the thing I would recommend, if you have a home in White Salmon like I do, I track my days in Washington versus Oregon, and in the Oregon pub for an individual tax filing, there's a way you can allocate days worked in Oregon and so on, so you could not pay as much tax on your W-2 for the state of Oregon to minimize your Oregon tax. Beyond that, retire on that side. It is what it is. Oregon's one of the top 7 in the nation. No sales tax, and then you got sales tax. It's just a really crazy dynamic that we're all faced with. So I get yelled at because I shop a lot on this side, and
I mean,
it is what it is.
Yeah,
You're the only one that does that.
No.
But for your big, like when you buy a car or something, you can't get out of that. You can't buy it on Oregon.
No.
You get out of
Yeah,
sales
you're pretty much
tax.
stuck.
So it's only like little things that you could save sales tax on.
And then you can, if your itemized deduction schedule, if they allowed more than the 10, then sales tax could become a player again. Versus they have an allotted amount for Washingtonians that just populates on the tax return if you're not over 10. So if there's anything to change in the code, I would hope that would be one thing that changes and they allow that again, because that would really kind of make the playing field a little more fair. So there's really no tax haven one side or the other. There's many reasons to be in Hood River, there's many reasons to be in White Salmon, or anywhere over there.
Anyone else?
Do you have recommendations of hiring employees versus contractors?
Good question.
Yeah, employees are expensive. But then there's like a 14-prong test that the IRS has to determine employee versus independent contractor, and it's somewhat vague. And
14 vague.
it's a little shocking, really. But yeah, I mean, you can get in trouble. I had a client who had a computer store, and he had a salesman that was an independent contractor. And the problem was the salesman was wearing his shirt, and he was told what his hours were, and he was, all his duties were basically driven by his boss. And then they switched. Yeah, not his boss. They switched him to an employee, and down the street from my office is Oregon Department of Revenue, and there's about a 6'6" tall blonde that walked right into his office and said, you know, how does this work? And yeah, he had back taxes, converting it back, and then the missed payroll taxes. So it's kind of a risk. You have to be really careful that my question for my client is, do they have their own business license? Do they file a Schedule C, or do they have an LLC? Do they have business insurance? Did they attain any accreditation to provide this service? Are they truly an operating business and they wear their own, shirt, IT, whatever it may be? Yeah, employees are expensive, but they're also part of your team, and then you can really nurture and grow them and make them a bigger part of your team. So yeah, independent contractor, that's a sticky spot, but I have tons of independent contractor clients, and they're fully independent contractors. Just kind of depends on the situation.
Are you raising your hand back?
Yeah, a lot of us are pushing technology around here. How much of it can be written off, or is there a level where research and development can be written off?
Well, there's some new legislation. It's been around for a while on the R&D credits, and you get to a certain level where you could just write it off. If it's going to be meaningful for long term, it's almost worth investing in some of these third-party CPA firms that focus solely on the R&D credits, and they'll pull in labor, capitalize some of the labor, all the costs that goes in, and it's a meaningful federal tax credit that flows to you as an individual owner. And I've had some clients that they do that for everything. Brewery recipes, nacho recipes, special sauce, you name it. And the R&D credit's huge. They're trying to change the rules on it a little bit right now and not make it as beneficial to the owners, but nothing's changed. We've been acting like it's the same. But if you have a innovative type business that's changing, these folks will come in and they'll figure out a way to get you an R&D credit, and then they will stamp it. Oh yeah. Yeah.
So when you say credit, are you saying just, is that a direct write-off, all the expenses of that is a write-off, or is there?
It's different. Yeah, it's kind of an add back, but then the credit's more meaningful if it's a federal tax credit, because it's like withholding on your tax return.
Yeah.
So it depends on how much you're spending on this R&D. I have a civil engineer that he does, I don't even know how a civil engineer qualifies for it, but it's because of the efficiencies that they put in these new buildings that they qualify for it. And it's a meaningful number that hits personal tax return. And it's basically like prepaid tax to add back and not take those deductions and get the credit, essentially. Even at the individual level now, with some of the energy efficiency stuff with that IRA, the Inflation Reduction Act, home improvements and things, they've really enhanced some of the, for boilers in the home, or new HVAC systems that meet certain levels of, I was talking with an HVAC group today about that, how the rules just changed, but it can be, windows, there's a lot of things you can take on your personal tax return. And it's really simple, and you get 30% of the cost you paid for the actual equipment and the labor and installation, solar, all those things, and then still benefit from the, the product itself. So you just have to dig a little bit to get to them. So if you're spending the money on those kinds of things, don't forget, if you have a electric car, the charger, $500, that's eligible for a credit, your personal tax return, regardless of income and those kinds of things. Yeah, there's a lot of new stuff out.
Verifying the R&D one, isn't there a minimum at which to apply it? Is it $100,000 or?
Yeah, there's a minimum, and then there's an average over a 3-year period, and that's where the calculation gets a little complicated. But once you get into it, year 2 and 3, then you start to realize the benefits of it. And I just rely on those groups to do all the work and calculate it for us.
But if you're only spending $30,000 on R&D, then it's not that worth it.
It might not be. Yeah, it might not be. I just ask them because it could be free to you to get their opinion.
But isn't that still a business expense?
Yeah.
Well, Yeah, it would still be a business expense for sure. Yes, even if it doesn't benefit to the credit. Yeah, because it's coming out of your account and it's going to be necessary and ordinary cost of doing what you're doing. And that's kind of the temperature test that you want to apply to these things. How do I make it fall into my business as a deduction?
Anyone else?
How often should you be talking with your CPA or
This is November and December is kind of the busy planning time. A lot of it can be accomplished at tax time. And so I kind of, the expectation I set with my clients is let's talk in the fall if something changes, but I try and nail down 2024 when I finish 2023's tax return with them, like what's going to change. You're retiring, you're going on, Social Security, how are these things, what's going to be different, spouse died, so there's a lot of planning. And my clients, I work with them to like, let me know when things change, but all my business clients, I'm always working with them in the fall to make sure we're on track so that they don't incur penalties and interest if they're having a really banger year. What can we do now? Spend down, depending if they're cash basis or accrual, don't bill, push it into next year. So I would say, if you have a big change from the prior year, when we work with our clients, the numbers, we always are comparing the plausible relationships between the numbers and reality, like what happened, why is it different, it should stand out. If it's not, they're consistent. Some tax returns, I could close my eyes, I know exactly what's coming in the door because it's been the same for 20 years and it'll never change. And those are really easy bread and butter tax returns, but the fun ones are ones that have lots of complication, lots of money, lots of different things going on and planning opportunities. So if you have a big change, I would meet with your CPA.
And take out your broadest paintbrush here. If you could have every person in this room come away with 3 things that they'd walk away from this kind of getting a better picture of their own accounting strategy, what are 3 things that they could take away?
3 things, ooh boy, that's tough. I don't know, personally, I think the obvious goal is to make as much money as you can. And the more you make, the more you pay. The more you pay, the better you feel. That's, for me, that's the biggie, is like, how do we knock this out of the park? I don't know, save as much as you can. If you leave any of those opportunities on the table, that's a biggie. You're not maxing out retirement. That's a biggie. That just saves you money, and then just make as much as you can. Communicate, work with your peers, talk to your CPA. Things are going to change, obviously, here in the next few years. Maybe not. But I would think that some of the tax policies are going to change. The last cycle with Mr. Trump, it was, very, that was great for the corporations. And so that's why some of the things we've put in place to make self-employed folks similar to tax rates of corporations by giving you these qualified business income deduction and things. And so it could be an interesting run. Not sure how it all works. And yeah, I don't know. I think party later is kind of my rule. Like, pay your dues now, save, punch it in so you can play later. Make as much as you possibly can.
You mentioned save versus go into debt. When would it be beneficial though to finance a big purchase versus using your cash?
It depends on your plan, like how much cash you need for operations. Debt's great for appreciating assets, but it's also great for, you need it for business. But if it's going to cost you more than you're earning, maybe in the market or those kinds of things, it just depends on your situation. For capital replacement, for equipment and those kinds of things, whoever you're working with, for tractors and those kind of things, I have farmers that always cycle through debt, but it's pretty reasonable and they use those assets so much that they're worn out. So it makes sense to just keep them on a rolling stock, but it all really is just depending on your situation. If it's going to benefit your business long term, then you might need to go into debt. If you need multiple airplanes that'll generate more revenue, those kinds of things.
So like, how do you decide, like use your savings to finance that, to make those purchases versus getting a loan?
I look at it also from a business. Can the business make it pay? If I have a rental property, can the tenants pay that thing off versus me put my money on it? You know, is it going to work? So that's your first question. Is it cost prohibitive? You have to kind of analyze it both ways.
And I'm sure there's a difference in tax.
For sure.
When you buy something outright versus.
Yeah, because I have a corporation I just met with the other day. The owners have enough money to lend the business money to buy assets and take back a note with payments at 6-7%, like in a reasonable interest rate. You know, they're making 5% in the market right now on their safety money market account. So they became the lender. The other guys, or they were going to go take a loan out at 7 or 8%. So it's like they might as well pay themselves. So you could do that as well if you loaned your company some money and then paid yourself a little bit greater than applicable federal rate in effect with the IRS, because that's kind of like the bottom line rule, is to be above the applicable federal rate in effect when the loan starts, and then set it up on an amortization schedule and have true loan payments going out monthly, not just a no payment program. Actually pay the loan back to yourself and then interest income and so on.
Okay.
And finance your business to buy the asset is one way.
So versus just doing the owner contribution to the business to buy the asset.
Can do that too.
Yeah.
And that's what a lot of people do. They just finance it.
Yeah.
They just put the money in and buy it. Because then you're going to get a depreciation deduction on the asset that's going to benefit you. And in the end, the profit, cash flow is going to come back to you. It's all your money anyhow.
Yeah.
And pay yourself back. You know, it just depends. There's so many different ways to look at it. Anybody have a C Corp in the room? No C Corps.
No.
I mean, it said strategies, and that's where I have strategies.
Strategies. Small working strategies.
Yeah, I mean,
strategies make money.
Numbers are fun, and I think the biggest thing is to get really high quality detail on your books, and so you can see what's going on, and you can back up and look at, you know, why it's working or not, and make adjustments.
I got a question. We do a 3-week paid internship program during the summer for teens, and it's my understanding, and this is the way it goes, anybody that makes over $600 is an employee, and you have to pay taxes on it. So we have these great young kids that make $1,500 for a 3-week program, and we still, unless you know of a obscure, legitimate way to not have them have to be considered employees.
So they're on actual W-2s? Yeah. I don't.
But it's
Yeah. I
such
don't.
a small amount of money.
Yeah.
And we just want to see the money in the kid's pocket rather than.
Partially in taxes. Yeah. Yeah. I don't think there's any way around it.
Okay.
Unless you just don't pay them, and then
Keep asking the
give them
same
benefits
question.
and.
I get to say, you know, if you
give
don't
'em-
like the answer, you try again.
I know.
right?
Yeah, but that's an opportunity for those kids to put all that money into like a Roth, you know, or something like that, which is probably not going to happen. But
How would you gift it?
in that, yeah, I mean, Fiona would have to, gift the money.
You can gift it, then it become money too.
Yeah, it's just a lot of gift tax returns that you'd have to file. Well, actually, it's under the 18,000.
Yeah, so gifting is non-taxable, so it's.
Then it wouldn't be a business deduction as well if you gift it, because a business can't gift. They could make a charitable contribution, but these kids aren't charitable qualifying 501c3s, so they may be charitable, but they're really not.
Could
you know.
include in housing?
Yeah, if it's, I mean, there's that too. Then you get into these allowance things where you're supposed to put that on a W-2. I mean, the amount of that happening, I think, is pretty small. But I think the cost of running a W-2 at $1,500 and maintain that payroll is a nuisance, but it's probably the smoothest way to go.
Once again, I do like the
Is it the payroll tax, or are you talking about income?
It's the system.
Just all of it, W-4s.
Oh, okay. Yeah, just 'cause, like,
and-
if you're only earning 1,500,
Yeah.
you're not gonna owe any income tax, so that's.
But they do get a certain amount of withholding.
Yeah, they'll get a little bit of
And,
withholding.
you know,
It might not seem like much to us, but.
Yeah, I mean, I worked as a teenager, and then they learn to file their taxes, and it's
Yeah.
super simple to file your taxes, and you just
Yeah.
do one job.
And this is through the nonprofit, right? So, yeah, that's probably going to be the same result.
Nate, thank you so much. Stick around a little bit for,
Yeah.
please eat all the charcuterie. Next HubTalk, we'll get the slideshow going again. We'll be meeting at the Riv in the Dalles on December 12th, always second Thursday of the month. We deliberately did it to avoid the holidays. We'll be talking about kind of strategies, is too big of a word, but we'll talk about how we can develop ideas to think beyond local business and ensure kind of that, like, everyone's worried about that bell curve that we hit in the winter, so how we can maintain through that and grow our business while thinking beyond just local and think regionally. So should be really good. 5:30, 7:30 at the Riv, December 12th. The 10th Tuesday, we have GTA members in the house. We have the holiday party as well.
Not just members.
Not just members, it's for everybody.
GTA Winter Party, we're gonna celebrate, we're gonna have awards for the tech leader of the year. We have a past recipient sitting right next to us. And for the STEM leader of the year. So December 10th, for men, 403.
403.
Yeah, that's this way.
You're right. I corrected you earlier. I'm backed up. I'm reversed. That was great.
Where's the red?
10th.
December 10th is a Tuesday, I think.
Oh.
Tuesday or
The old,
Used to be Riverenza.
yeah, oh, cool. Okay. Thanks for stuff from out.
Or, same place, and, follow the Innovation Hub on LinkedIn, Facebook, follow the Gorge Tech Alliance on, LinkedIn. I don't think we're on Facebook yet, maybe someday.
Gorge Tech Alliance isn't on Facebook? That's not very techy of you.
We're so past that.
Hey, does anybody need the bureaus of DOI?
Oh, yes, and then we have the resources for the BOI as well as the lovely handout that Nate created with some answers to tonight's questions. But yeah,
if you haven't filed the beneficial owner stuff, I have info.
Thank you guys for coming out.
Thank you guys. Yeah. You take care of that, Dan?
Thanks, Nate. I actually just did this yesterday.
Okay, sweet.
And I was like, so I did it through InkFile.
Yeah, I raced with Fiona.